Hello, greetings, and welcome back to the BFC, where we go into the trenches of the trading world. We have a great guest, a returning guest, Jamie Steigerwald of ECGI Holdings. Now, listen, they just put out a killer PR. So if you haven't, go on otcmarkets.com, type in ECGI, go to news, and read the PR, guys. It's excellent. These guys are finally making some noise. Love it. And by the way, the market cap, if I believe, it's only 380,000. All right, super low market cap. Tons of upside here, but even better, hey, he's going to be here with us today. So if you have any questions, make sure you put them in the chat. There's a lot to look forward to with the stock, in my opinion. So I'm not going to waste any time. Let's bring him in, Mr. Jamie Steigerwald of ECGI Holdings.
How's everybody doing?
Hey, what's up? How you been?
I'm doing fantastic, man. How about yourself?
Well, I'm doing great. I mean, that was a kick-ass PR that you guys just put out last week. You're fine. I know you've been on this show before. You've discussed everything you have going on in regards to the mortgage tokenization, and we're finally here. So how are you feeling? Tell us a little bit about how you solidified this deal.
Well, the deal really came about as we've moved forward in this long journey to get to this place. So, we started a few months ago with that $25 million line of credit, and the other announcement we made with regards to getting that reoccurring income. That really laid the foundation for us to get the LOI signed with RezyFi. And the goal there that we talked about was to get these mortgage assets tokenized and onto the blockchain. And from there, once we solidified that, we looked for a good foundational partner to work with. We chose Nomyx. We signed that deal last week. And now we're rocking and rolling and ready to move forward with our pilot program here.
Well, yeah, let's talk a little bit about that. You've officially moved now from concept to live pilot, which is remarkable. What does this milestone represent strategically for ECGI, and how significant could RezyFi become within the broader ECGI portfolio?
Yeah, well, it positions ECGI as an infrastructure player in RWA tokenization, and so all the real world asset tokenization that you hear about. And as far as how RezyFi is going to play in our particular portfolio, we really view it as the core operating vertical moving forward, with hopefully a decent amount of reoccurring revenue there.
Right on. And I already see a question in the audience. So guys, put your questions there. That's why we're here, to do live due diligence. So I'm going to ask my questions here, and then we're going to get right to the audience. So why mortgage assets? Talk a little bit about your background there. There are many asset classes that could be tokenized. Why did you choose mortgage loans as the starting point, and what specific inefficiencies in this $2+ trillion market are you aiming to solve?
Yeah, no, the TAM is huge. It's over $2 trillion for residential mortgages per year. The reason why we chose it was really it's the right team at the right time with the right opportunity. So as all these asset classes are getting tokenized, I have over 20 years in mortgage and real estate experience. John Vu, who's the CEO of RezyFi, not only is he a mortgage attorney, but he has extensive experience in mortgage as well. He and I have worked together on several projects over the last 10 years. So just him and I, sitting down, talking, agreeing that this was a good thing to do. It really all just came together very well for us in terms of right time, right opportunity. They wanted to grow RezyFi. We want to grow ECGI. We have the right skill set in place to get this done, and that's kind of how it all came together.
Excellent. Yeah, and by the way, guys, if you're on X, take this video, share it on X, because X has this new thing, by the way, where it just shows that you're live and it doesn't show up in your feed anymore. So like we were talking backstage about algorithms and stuff like that. So if you have the ability, guys, make sure you are sharing this interview to everybody so that way they could jump on and ask questions. So thank you very much for answering that. I want to break down this $10 million pilot. When you say you are tokenizing up to $10 million in ResMac-originated loans, what exactly is happening on chain? Are these loans being fractionalized, representing the pools or vault structures? And just give us the plain English on this thing so the
Sure.
average Joe, the average trader could understand it.
Yeah, sure. So for the pilot, the first thing we're doing is we're do a one-to-one tokenization between one loan and one token. And the purpose behind that is to validate the infrastructure and really to build the rails that we need to build around tokenization of mortgage. As a simple example, we need to build the rails around borrower payments moving from the servicer fiat into crypto online. And then we need to be able to split that payment between the principal and the yield, get that reporting done so that everything's in place for investors to feel comfortable purchasing the tokens moving on. After we do the one-to-one, then we're do a pool, like I said, up to about 10 million of ResMac mortgages that are just depend on what loans they have available at the time we're ready to move forward with that pool tokenization, and that tokenization will be fractionalized. So that way we can test those rails as well, where we have multiple loans, multiple token owners, and making sure everything works together in concert.
Excellent. I like that term for obvious reasons. Let's talk about compliance. Let's talk about regulatory standards. Uh, Mortgage assets operate within heavily regulated financial frameworks. So, how is RezyFi ensuring programmable compliance, identity verification, and transparency meet institutional grade standards?
Yeah, so the transparency part is super easy. That's everything's going to be on chain and visible. The onboarding of folks onto our platform, Nomyx does the heavy lifting there with the KYC, IML uh, plugins for us. So that's really where Nomyx comes in, not only in the tokenization portion of the platform, but also in the onboarding of the investors as well. So we're not having to build that part from scratch. They're going to handle that heavy lifting, and then we're handle all the mortgage pieces of it. In addition to that, we work with Laura Anthony and her team on the legal side to make sure all the structures are correct, all the smart contracts are in place, and those things are good to go.
Excellent. Let's talk about the blockchain evaluation process. You mentioned testing deployments across public blockchain networks. What specific metrics are being evaluated? Transactional throughput, cost efficiency, ecosystem compatibility, maybe developer tooling. What would ultimately determine which network that you choose?
Well, I don't know that it's an ultimate network that we choose. That market is moving very fast. So we are looking at cross-chain interoperability. I think that's going to be key to ensuring liquidity as the technology moves forward. But our primary metrics are performance, cost, security, and just long-term ecosystem viability.
Excellent. I do want to talk revenue because the one thing I look for in companies all the time is, are they producing revenue? The press release does reference a transaction and platform usage based model, fee model, right? Can you expand on how Resify plans to generate revenue? Will fees be tied to loan tokenization, pooling, life cycle events, or secondary activity? How is revenue going to form?
Yeah, it's really going to be all the above. So the goal is having reoccurring transactional-based revenue that aligns with the asset growth. So that are include tokenization origination fees, pooling and structure fees, platform use fees, life cycle events like transfers and settlements, and even it's with certain mortgage project products, we will also generate fees off of some of the yield as well.
Excellent. All right, I want to talk about the pilot itself. It's expected to run for what, 45 days, 60 days?
Yeah, 45 to 60 is what we're looking at.
Okay. So what specific milestones or checkpoints must be achieved before moving to the full commercial launch, the big kahuna when you guys launch this thing? And what defines a successful pilot for this?
Really, the successful pilot in this is going to be able to offer our first pool to investors. So that's the true, flag in the ground milestone. But in addition to that, we need to have a stable technical performance. We need to have reliable tracking of all the life cycle events, in terms of payments and not only payments from the borrowers on their mortgages, but in addition, how those payments flow to the token holders, and then accurate representation of the loan assets on chain. So some of the things that we're looking at is, how do we keep that pool going longer term? And we have a couple of ideas about how we might do that. So just making sure that there's an accurate representation of all the loans in the pool for that particular group.
Yeah, and I will say the fact that you got that line of credit backing you guys up, I think that is, and I know a lot of companies right now, and a lot of projects, some that I'm even a part of, that are looking for the capital and looking for that line of credit, so that way you guys could implement the pilots and implement these great models that are being created. So you're really lucky to have that, I think. So good for you.
Yeah,
You know.
yeah, and that's kind of why we started with that in,
Yeah.
in terms of, if you go way back and you look at our announcements, we started with that, making sure we could secure that line of credit before we move forward with RezyFi and before we move forward with the tokenization projects.
Yeah. And I want to state the obvious here, because we're hearing a lot about tokenization. You see a lot of OTCs, a lot of small caps. They're mentioning tokenization. I think we're going to hear the words crypto and tokenization and AI. Those are words that they're with us, guys. They're not going anywhere. So get with the times if you think it's not. Tokenization of real world assets. It's becoming a little bit of a crowded space, but what differentiates ResMac-Fi's infrastructure and approach from the other platforms exploring mortgage or real world asset tokenization?
Yeah, so there's a significant difference between tokenizing a mortgage and tokenizing other real world assets. As you alluded to earlier, there's significant securities and regulatory hurdles that a lot of companies have to overcome in order to do that successfully. The only one that I know that's doing it successfully right now is Figure, but they started a while ago in this process, and they've built their own ecosystem that's very closed and vertically integrated. And while at the time they started building that, I think that's going to hurt them in the long term. You can see now in some of their recent PRs that they're putting out that they're expanding their ecosystem to start connecting with outside systems so that they can get more liquidity into their vertically integrated platform. And then we're starting with a lot of these systems are matured, in terms of the other parts of the RWA tokenization platform, and that gives us as a kind of a second mover advantage, where we can learn from what Figure's done and what other folks have done in the RWA space, and then just make sure we're implementing best practices and make better decisions as we launch.
Excellent. Let's talk scalability. If the pilot validates the model, how quickly could the scale? Are you envisioning hundreds of millions or even billions in tokenized mortgage assets over time? And what does the long-term roadmap look like? I always ask about the roadmap, so I had to.
Yeah, absolutely. So, I mean, going back to Figure as kind of the only parallel right now, they currently have 12 billion in TVL, so total value locked, and that's less than 1% of the mortgage TAM that the 2 trillion mortgage TAM that we were talking about earlier. Um, and when you talk about like long-term viability, even BlackRock's CEO Larry Fink, he frequently states that he believes that every security in RWA will be tokenized, and I agree with him wholeheartedly. So long term, we want to be, our goal is to be the number one platform of choice for tokenized mortgage assets. It's very narrowly focused, but it's a huge market, and I think we can be a significant player there.
Oh, absolutely. This one has, and I did a little real estate. I wasn't good at it because I didn't have the time. So like this one has always intrigued me. CGI has always intrigued me, especially the mortgage side of it. And so like that's why I've been really watching you guys. And so this is freaking cool. And I think you guys are going to be successful at it, in my opinion, because like tokenization, like I said, it's a crowded space, but it's very niche what you guys are doing. So I think you're on the right path, man. I really do.
Yeah, there's a ton of folks out there looking to securitize, um, say, or I'm sorry, not securitize, tokenize, stocks, bonds, and a lot of the other real world assets. As far as I know, there's very very few people in this mortgage space right now. Figure is the only one that's really got any kind of momentum. So I think and the TAM is huge. So I think there's
Mm.
plenty of room for us to be a significant player there.
I do have one or two more questions, and I see some really good questions in the chat. And so let me just say I want to talk from the shareholder perspective. Why could this pilot represent a potential inflection point for the company? And how should investors think about the long-term value creation opportunity?
Yeah, well, it started with getting that $25 million line of credit
Mm,
and revenue generation in place. And that enabled us to do the LOI with RezyFi and kind of, kick off this pilot program. This is a long-term effort for us. We've assembled the right team, the right opportunity with the right capabilities to achieve this goal of being a significant player in in tokenized mortgages. Long-term value is going to come from repeatability. We're going to do the same process, lower the friction, better margins, and just keep on doing that over and over. Um, and like our shareholders, investors, to think of us as think in terms of compounding. Each successful cycle strengthens our platform, the data, and the partners. And the partners we network with.
awesome. Well, I just want to give a shout out to the people that are watching. Alec Weinberg's with us. We got the unboxing bastard. We have Surmar. Let's get to some of these questions. There's some really good questions here. I'm just going to pop them up on here and read them. If the $10
All right.
million pilot proves successful, what are the next steps for scaling and how quickly could this expand? From B
Yeah,
Wayward.
I think we touched on this a little bit. The next steps are really to open this up to other investors in terms of the pool sizes, and also open up the platform to other IMBs in terms of being able to get their mortgage products onto our platform. So we're looking at scaling not just from ResMac's ability to originate loans, but really the ability of the mortgage industry as a whole. So that's kind of why we've separate RezyFi as a tokenization platform and ResMac as the origination platform. So ResMac gives us this ability where we can have mortgages test and own that operating system in terms of the existing mortgage portfolio. So we don't have to go find a partner to allow us to test the tokenization platform. But really, that's where ResMac plays a key role in what we're doing. But the end goal is really to have this available for all the other IMBs out there. Whether they're working on a flow basis or whether they're working with $100 million pools, is to be able to bring those loans over, get them tokenized at a reasonable cost, get them off their books. Hopefully save on some of their haircut and mortgage warehousing fees, and find a better solution for them in terms of uh, getting a lot more liquidity so that they can fund more loans faster.
Excellent. Can you provide, from Serena, can you provide clarity around any outstanding convertible notes or potential dilution? And what steps are being taken to protect shareholder value? I love the question. All right. So I think it's good. Answer that tough one right there, because I know people are looking at, you do have you have a good amount of convertibles. I mean, it's not like pages and
Yeah, we
pages, but it's substantial enough.
yeah, the company's been around for a while as a public company. It's gone through a lot of iterations, and because of that, there is a lot of outstanding convertible notes and debts. If you've noticed over time, I think our convertible note holders have converted rather responsibly, and everybody wants to see this grow. So, we've talked to all of our debt holders. Everybody seems in line with what we're doing. They want us to succeed and move forward. They don't want to just, they've been. I think everybody's been around there for years, and if you look at it, you can see it's the same investors that continually work with us to reinvest in what we're doing. And they're not going to want to shoot themselves in the foot by doing a quick cash grab, at the expense of their older debts. So,
Okay.
yeah, I think the answer is really we're just in constant communication with those guys, and we've asked everybody to be considerate and convert responsibly, as we move forward.
Yeah, and we hear that all the time, and but like I think there's so much upside. You're sitting at a 308,000 market cap or whatever.
For
So
sure.
I mean, I don't know. I think there's tons of upside here. So convert wisely if you're listening. So I want to get to the unboxing bastard. I love saying that. That's a fun one to say.
That is a good
What do you,
name.
it is a good name. I do think it's a good name. What do you see as the biggest risk to execution, whether regulatory, technical, market adoption, or otherwise? Good question.
Yeah, I think the biggest risk to execution is really on the market adoption side. The mortgage market has been doing the same thing for a very long time, and it's tough to teach old dogs new tricks. But our method of bringing them over is really going to be increasing that execution for them. So, on the mortgage side where they're selling off and maybe getting 101, 102, 103, we're hoping we can increase that revenue for them by having a faster offboarding. And we do have a little bit of a chicken and egg scenario where we do need to get the investors to purchase the assets as we're bringing on the assets to be sold. And I think we have, because of my experience in the mortgage industry and John's experience in the mortgage industry, we've been talking with a lot of partners, and a lot of them are anxious for us to move to that next step. So hopefully we won't have too much of a chicken and egg scenario. But that's, I think, is the biggest risk, is either we get too much appetite for onboarding and not enough to be able to offboard to investors, or we have too much investor appetite and we're having difficulty bringing loans on board.
Excellent. I'm going to keep up with the questions here. We have about 3 more questions that are in this chat. Thanks for taking the time, by the way. Another one from B Wayward. When should investors realistically expect this platform to begin generating meaningful revenue, and what might early revenue look like? I know you talked a little bit about that earlier, but if you could just address Wayward.
Yeah. So in terms of meaningful revenue, I mean that's kind of subjective.
It is.
So I think we look at it in terms of basis points on total value locked, and the different aspects in which we can generate revenue. So we're targeting anywhere from 50 to 100 basis points on total value locked, and it will depend on the speed of which those assets move on and off the platform, and the speed at which folks decide to take advantage of other aspects of tokenization that may be available to them in terms of locking, dexes, looping, those types of things with the yield products.
Excellent. Another one from Unboxing. So should I hold off on securing a mortgage loan? Thank you.
I don't know that we're going to impact the origination piece of it.
Okay.
The origination still happens from your traditional brokers and lenders. We're really handling with the mortgages once they've been closed, and the secondary aspect of mortgages. So I don't know what your particular situation is. There's always that chicken and egg in terms of, like, if rates get too low, then housing prices increase. So was that a better time to buy because you have a lower rate but you're paying more, or as rates go up, you have more of a stagnant market, which may make it more difficult. You're paying more per month, might be easier to find. That's the age-old question: is when should I buy or when should I refinance? So.
Right on. I have another question from Sir Markham. What is management doing to support the stock going forward and build long-term shareholder confidence?
Yeah, I think that goes back to the other question about, what are we doing with our existing debt holders? It's the same thing. We're working with everybody to make sure that we have a long-term scalable platform. It's one of the reasons why we secured that $25 million line of credit up front, is so that we know where we're going to be borrowing from as we grow. We're not going to be in a situation where we need capital, we don't have ready access to capital, and we're having to take bad deals in order to get the capital we need to grow the organization. So that's kind of why we started there with that line of credit, and then move forward into being able to execute to the point where we are now.
Excellent. I want to thank you for taking the time to give us a really guys. This has been a substantial update.
Absolutely.
And your last words, sir, to the audience and to any shareholders or potential shareholders. This has been really informative. And guys, if you just want to read through that PR again, if you're watching the follow up on this, check out the PR. Always go right to the source. All right. Never take my word for it. Always make sure you're checking security details, checking PRs, checking disclosures, reading the filings. Guess what? It's something that everybody should be doing, especially if you're investing in high risk stocks. And by the way, disclaimer, this is not financial advice. I had that up before we started this. So some last words to shareholders and potential shareholders out there.
Absolutely. Yeah, we're super excited about what we're doing. I'm happy to answer anybody's questions. Eric can tell you, like, we're pretty active on X. So if you're watching this at a later date and you have some questions, feel free to put them in the comments, either on our channel or on the Buffalo channel. And, we're super excited about doing this, and super excited to have you guys along for the ride.
Excellent. Thank you so much for joining me. I know you're going to hop on. You're going to hop on maybe in the next couple of weeks or whatever, and you are welcome anytime to give us an update. That's what this is about. It's DD from the source. I'm going to thank everybody for commenting. Great questions today, and thanks for joining us. And remember, guys, there is more that binds us than breaks us. That's all we got for today. So peace out.
Have a great one, guys. Thank you.